Roger Montgomery from Montgomery Investment Management, and welcome to this week's Video Insight. Well, we know a disproportionately large portion of our investors, those in our equity and private credit funds, are also investment property owners across Australia. Many own multiple properties, and so today we're diving into a hot topic that's affecting many of us right now, the rental crisis. And while the issue is a national one, I want to zoom in on Victoria, where things are getting quite intense for both renters and investors. So what's happening? Well, you'd think property investors with exposure to Victoria would be cheering. Victoria's rental vacancy rate has plummeted to just 1.01%. So more demand and less supply should make owning a Victorian rental property a very successful endeavour. But here's the twist. Investors are actually leaving that market. As you can see from the following chart supplied by PropTrack, Melbourne property prices are lagging many sunnier cities. And with prices up just 1% in the last 12 months, it seems barista coffee, drizzle and scraping ice off your windscreen has lost some of its appeal. But the rest of Victoria is faring even worse, with prices down 1% over the last 12 months. That tells me there's something going on statewide. And what is it? Well, two big reasons really. There is of course the adverse impact of those higher interest rates we've all heard so much about, but in Victoria it's being compounded by even higher taxes. That's right, whenever the Labor government has a budget issue, they turn to other people's money to fix it. Forgetting Margaret Thatcher's reminder that the problem with socialism is you eventually run out of other people's money, the Victorian government recently introduced a slew of new taxes that hit everything from property development windfalls to a tax on Airbnb rentals equivalent to 7.5% of annual revenue. And just when the market was trying to digest those, more taxes were introduced, expanding a vacant residential land tax to cover the entire state, including holiday homes. It's no wonder the Real Estate Institute of Victoria reports that 1 in 4 Victorian property holders sold their properties last year. I'm surprised prices haven't fallen further. And it looks like they've mostly moved to Queensland. Melburnians have long migrated to Noosa for their holidays, but with prices for the most desirable properties in Noosa Heads and Sunshine Beach rising about, get this, 4-fold in the last 5 or 6 years, the Melbourne migration has expanded to all of Queensland. In the last 12 months, prices in Queensland have risen more than 10%, and in Brisbane they've risen almost 13%. It seems that there is indeed some nuances to the socialism implemented amongst state Labor governments. And what does this mean for renters and the overall housing market? Well, in a reaction that is the opposite of what Victoria's Labor government intended, with investors pulling out, the availability of rental properties is falling, not rising. This isn't good for anyone looking to rent. And according to the Property Investment Professionals of Australia, the people who supply the majority of rental homes are selling up in droves. So what can be done? Well, thanks to really poor spending decisions, Victoria's budget is cooked, with almost $180 billion of debt. That's $20 to $25 million in interest per day. They're in a tough spot. And property investors, those wealthy elite capitalists, are paying for it. There are better ideas, of course, like the UK's idea to allow a tax-free amount of revenue to be earned from renting out a room, or tweaking capital gains to offset some of the onerous recent changes elsewhere in Victoria's tax structure. Of course, many Victorians aren't waiting around for things to improve. They've moved to Queensland. So thanks for watching. We'll see you next time. And in the meantime, continue to follow us on Facebook and X.